ladies and gentlemen. This is February the 7th, 2016. I'd like you to have a listen to our latest update here. We're going to do a bi-weekly update on the markets, and right now the markets are extremely volatile. We have the Dow Jones here that has lost 211 points on Friday. It's attempting to recover from the vicious sell-off we had earlier in the year. It still may overtake these slight highs that we made here, this bit of resistance on this tepid recovery so far. But markets have a habit of fooling everybody, and I expect that there's a very real possibility that we'll hold this level in here in the short term, and more than likely rally up to here, because a lot of the big money wants to recover something here. They don't want to just capitulate. So I think that this here will provide the previous level of support that was downtrending here. That line could be conceived to be extended out to somewhere between the 50 and the 200 days, where you're going to find your resistance, I think, on this move. So we're looking for that to unfold over the next, I would say, week or two. It's going to be fairly quick. After that's done and we start heading back down, that's where you have to be extremely careful, because there's a lot more going on under the hood here than what we're led to believe in the media. If you look at some issues such as Amazon.com, on our previous update, or one couple of weeks ago or a week or so ago, January 29th, we had this failed breakout here with Amazon, and then it sold off. Then they had the earnings, and it tried to get up over the 50-day, and it failed. And now it's well below the 200-day, with the 50-day falling down. It's now sitting at 502.13. It was down 6.36% on Friday alone. I mean, this isn't This isn't stock-specific action here, folks. This is across-the-board selling that we're experiencing here. I'd like to show you Priceline.com. I think that's PRCN.
PCLN.
PCLN, sorry. PCLN. And this is another serious situation where you had this run-up, October, November, up to $1,450 a share, which is ludicrous, and way up above both of the moving average. I mean, this has been a great performing stock over the years, no question about it. But I think it's all over. I think we've crashed through this 200-day here, which was sitting at 1240 at that time, and now it's sitting at 1015. So it's lost like 24% just from going through the 200-day moving average. Prior to that, it lost a good 10 to 15%. So overall, accumulatively, it's lost about 33% just in 3 months. Wow. That's a serious drop. I mean, a lot of people are having their pockets picked clean here,
Wow.
And they're just not. I don't think they're going to recover that.
Wow.
It's going to take years. So let's look at the Russell 2000, because the Russell 2000 is a wider range index, and you can see now that it's threatening to take out its lows here that it made in at the end of the middle of January, January 20th, I believe it was. We're not far off of that. So all signals are telling me that whatever recovery we do get here in the smaller indexes, the Dow Jones 30, are going to be not that strong. I think there's so much going on under the surface, that so much technical damage has been done, that it's going to be hard to really get any kind of momentum to the upside going here. We can look at just look at Apple. I mean, Apple did start to recover a little bit. Well, actually, it didn't. Sorry, I was looking at a previous chart. Apple is now sitting at 94.02, and it's very close to its recent low here, just like Priceline and Netflix. Same thing. I mean, these were big names that everybody couldn't say enough good things about only 2 to 3 months ago. Let's just have a quick look at Netflix, and then I'll move on to some better stuff. So there you have it. I mean, come on. Like, a lot of people are getting their heads handed to them right now. And I feel sorry for them because, you know, their so-called financial advisors are probably telling them to stay the course. And the course right now is a severe bear market that's underway. And it should take these indexes down to very low levels in the next couple of years. So this isn't going to be over next week. We're not going to recover back to new highs. This is going to buy the dip. This is when they get up a little bit, if you haven't sold already, you're going to be wanting to unload. And with that being said, that's going to create a lot of supply in this market. So let's look at something a little more interesting here. Like, we can look at the Gold Bugs Index. And some smart money now is moving into the gold space, because all during the summer you had these support levels here that held most of the period from late summer right through to the end of the year. And then only into this year did you have a failed recovery attempt here in early January, probably as the market started to sell off, money moved in, and then the severity of the sell-off was such that everybody had to sell everything. So the guys that really knew what was going on here and wanted to, really build strong positions in this market, they let it go and they forced it down to here, which is below here, which would have taken out a lot of stops that a lot of people had. A lot of amateurs certainly would have said, okay, I'll buy here, but if it goes here, I'm out, And so the market just went down enough just to fool the greatest number of people here, which is what it'll do best. And then it reversed violently to the upside. Now you have a situation where people are going to be chasing these gold stocks, and where they have in fact bottomed. This is definitely a very solid technical picture whereby it has reversed, and it's well up above the 200-day. It's overtaken all these recent highs that it made all during that period. Everything's just converging in the direction of a good solid move here in gold and gold stocks. Let's look at Barrick Gold, for example. I mean, a few months ago, the media was full of, even stories that ABX could even go bankrupt. There were stories that, they had so much debt and they had, their bonds were going to be worthless, and there was all kinds of nasty stuff being said about Barrick. And, well, the market's telling me quite otherwise. This is the U.S. Barrick. We'll look at Toronto here for our local viewers. And there we have it. And so basically, Barrick bottomed nicely here in the third week of September, and then it started to go up here. And all through here, I mean, I've liked Barrick all along here. And it's really made a saucer pattern here. This is a circular, like a dish pattern, and it's very bullish pattern. And now we are at 1619 Canadian, up 5.06% on Friday alone, on a day when the Dow was down 200 points. So obviously smart money's moving in here. We can look at Newmont Mining, which is a U.S.-based company out of Nevada. Very large miner, same pattern, and this is why I prefer to really trade these golds and pay attention to the major trends, because they all travel as a group very nicely. And sure, you have some company-specific situations, but generally speaking, they are all running in unison. And here's IAMGOLD, which is a low-price stock, up 8.86%. So the real leverage is going to come from the names like IAMGOLD. Let's have a look at Yamana. Same thing, very bullish. Took out all these highs here. Boom, boom, boom. The declining trend line is gone. Gapped up through. Just the fact that it had an outside day on Friday, and most of them did the exact same thing. I mean, I watched the gold price It was trading at 1160 when the unemployment report came out. It retreated down to 1143, and that was actually the support level for gold. And gold turned tail and closed up at 1174, and all the stocks in the last hour or two of trading on Friday staged very good upside. So we can look at the smaller issue, AXR, which is a small silver miner, and which they have a mine in shut-in and care and maintenance. They won't bring it anything out of the ground until silver reaches $20. But the action in the stock tells me that that's going to happen because there's a lot of smart money running in here. There's volume now. The volume's been rising here for 3 days as it's risen up. It was 38 cents back in just the third week in January. Now it's 64. It's behaving right in sync with all the other gold stocks. Nothing wrong with this. McEwen Mining, another small cap. I mean, this is beautiful. Can you say this about Amazon? Can you say this about Apple? I mean, this is the beginning of a very prolonged, extended move underway here. And let's look at Goldcorp. Goldcorp, same thing. Classic example. I mean, I was surprised to see Goldcorp sub 14 in here. And but yet I knew it was the bargain of the century. And, I bought call options on it that will expire in January 2017 at $22. I mean, with this kind of action, they'll be in the money in probably 2 weeks. Because of the, once again, if you draw across here, that's been clearly taken out here. This is the beginning of a long, extended trend here. This is not going to be over with in 2 weeks or 2 months. This could be the move that takes gold up from its support level at 1,045 or whatever the low was recently, to its next leg up, and ultimately take out the high of 2011. Because people didn't think that gold was going to go from 250 to 2,000 almost. I have news for you though. It could. If you overlay a chart of the gold from here to the 1970s, that same chart depicts that gold could go to $5,000. I mean, there's people that say it could go to $50,000. It depends on the amount of monetary debasement that's going on. So there's a lot more going on here. There's a bigger picture. There's a scarier picture. And here's Pfizer. I mean, everything is just hitting the skids here. And the problem is most of the public doesn't realize it till they get their mutual fund statements, and those funds are not going to be reporting good numbers because the big names that they have in them are getting hacked to pieces, but most of them are loaded up with a lot of junk that is certainly being taken out back and shot. So we'd like to conclude with the thoughts that the trend has changed here from up to down in the general markets and from down to up in the gold market. And I'm not going to come out here and say that commodities are going to go up along with gold. I don't think that's the case. But I do think the case is that Janet Yellen is in a box and she cannot raise interest rates. The market is weak. The economy is weak. It doesn't support that. From a monetary standpoint, she should, because of the impending inflation that's going to happen. But that's not going to happen until we suffer this serious deflation, and with that is going to come along a lot more negative interest rates, which is going to send money to gold. It's already starting. Stay tuned. This is going to be one heck of a ride. Thank you for listening.